Availability rates fell in most major markets across the United States, and on the high streets, 10 of the 12 high street markets, the gateway city markets, the rents remained unchanged versus the prior quarter. This suggests that rents have stabilized, perhaps, on the high streets in most of the major U.S. and Canadian cities. The outlier would be New York City, where last quarter on Fifth Avenue, rents reached $3,000 a square foot, the highest level that we've recorded in New York City on the high streets. Now, the other area to look at would be Texas. Texas is an interesting market, particularly Dallas, in and around Highland Park Village. There was a number of luxury transactions that occurred in the last quarter there, and that's another bright spot. Economic data continues to show a mixed picture. The last quarter retail sales, second quarter 2013, retail sales were only up about 0.81%. That's compared to over 1% in the previous quarter. Non-auto retail sales in the month of June were unchanged, and the real GDP in the U.S. is now growing by around 1%, which is a bit tepid. Consumer confidence is up. In July, the index rate was the highest rate we've seen in 6 years, and home values and consumer balance sheets continue to improve. That's the one area to watch, I think, the most closely is the deleveraging of U.S. households and their balance sheets and the value of their housing, which will create and spur more retail sales. The one area I think we will see more spending in the future is on big ticket items, as a lot of U.S. consumers have held back on those items after the recession, and there's a bit of a pent-up demand there. Retail transaction volume was up around 9% in this last quarter versus the previous year. It's about a $13.5 billion trading market. Cap rates were stable in the last quarter, as they have been for the last 18 months. But the interest rate increase that we've seen over the last 90 days has not yet manifested in cap rates. We're watching that closely, and we would expect in the quarters to come that there'll be some changes there. In terms of trading volume and where it's occurring, the secondary markets are increasing in terms of trading volume at twice the pace than primary markets in this last quarter. What that suggests is that the economic recovery is spreading. There's more confidence to acquire properties in secondary and tertiary markets. Downtown Los Angeles, a lot of interesting new changes occurring within the downtown market. There is stronger employment growth that's driving the market, and also an influx of what we call echo boomers. Downtown Los Angeles will grow by around 11% in population over the next 5 years. A resident population could reach around 51,000 people. And there are a number of developments occurring in downtown Los Angeles that are mixed-use oriented, hotel, retail, multifamily, and office that are driving demand for retailers. What's also, I think, particularly interesting about downtown LA is on a risk-adjusted basis, on a value basis, rents are about half of what you'd see versus the west side of Los Angeles. So rents in downtown LA are around $30 a square foot, triple net, and in the west side of LA around $60 a square foot. So an interesting market, a value market being driven by value retailers and fast fashion, and we'll be watching it closely in the months ahead.